Hey there. Hey, yo, welcome to the live stream. Let's see. Should we talk about the shenanigans, Bitcoin stocks, or that the market feels a little correcty? We'll hit on all three. Let me roll a quick intro. We'll have a quick show for you. Dow giving it back some more after last week's late week pounding on Thursday. What, down about 600 points? Down again today. Things are feeling a little correcty-ish right now. And it's not that it has me concerned because when things feel correcty-ish, that feeling could go away. And since we don't like to go by feeling, feelings is what we substitute for a lack of information. We need to take a look at markets and just do a bit of a gut check by checking your time horizon. Here we go. All right, we are back. Thank you so much for joining me. I'm Mitch Goldberg. You're watching our live stream, Be the Boss of Your Money from Client First Strategy. This show is about personal finance, investing, and helping you to potentially avoid investing pitfalls, savings pitfalls, and helping you to potentially do things right that could accelerate your gains, that could accelerate your savings and investing, and help you basically strike that balance between living today and investing for tomorrow. So we'll talk about that first because it's important. We talk about retirement here all the time. That is the number one reason of why I'm here, right? It's all about retirement. If you took that away as a goal, I think we would all have nothing to do. I'd have to go out and get a real job, something that I maybe don't enjoy doing. But since I love doing what I do, I get to say I have a fun activity every day, not necessarily a real job, but it is serious work. And I do take it very seriously. As you know, I create content every day about that, right? And I hope you're checking us out on LinkedIn, on Facebook, on Instagram. My partner, Bobby Bird, can also be found all over social media. And we are creating a ton of educational content. Just by being in our orbit, I think you'll learn a lot. And that alone will help get you on your way. But if you want the real secret sauce, if you want the help, the coaching, the accountability, and the real knowledge for your specific situation that you could use, then you should reach out to us. That's important. You can reach out to us. We are here for you, and we are still open to new clients, and we are hoping you'll give us a call, take a look, check us out on our website, Client First Strategy, and Google us and all those other cool things. And if you don't mind, give this live stream a thumbs up or a heart or a applause, depending on which platform you're watching on. It helps the cause. And if you have any questions, ask in the comments. And of course, if you missed the live stream, you could watch it in the replay because this live stream will be on my YouTube, LinkedIn, Facebook. It'll all be there for you. And I post highlights almost every single day, 1 to 2 minute highlights that teach you a lot in a short amount of time. All right. So retirement. When I speak with people about retirement, first thing they want to know is, do I have enough money? How long will my money last? Could my money last through my retirement? But then I have to get into the softer skills, going really beneath the numbers. Because if it's just about the numbers, you could play with the numbers to make them work for you. You could decide, let me put in a lower number for what I'm going to spend. Let me put a higher number in for what I could juice my returns up to if I invest a little bit more aggressively. And people start to play with the numbers. And the people who have the people who do not have enough money to retire are the ones that fudge the numbers the most, that try to get me to fudge the numbers for them. We just don't do it, though. And what that means is, well, put me down for a 10% return. when I'm looking at them like, you're not getting a 10% return. You can't even take the risk anymore. You're too old of getting a 10% return. Maybe it'll happen, but we're not investing 100% stocks and aggressively. Maybe we'll invest, 60% stocks, 40% bonds, something to that effect. We work within some ratios to get you to a figure that makes sense for you, for your risk tolerance, as well as your potential growth. But people will do what they can to fool themselves and convince themselves that they can, in fact, retire, when there are some things you could do now to better prepare for retirement. You could maybe work a little bit later, maybe claim Social Security a little bit later. A lot of this does depend on your health, though, and I do realize I'm very sensitive to this. There are a lot of people who have to retire early for health reasons. It's not like everybody can work till 70. Just things happen. And if you are married or if you're living with a significant other and that person has a health problem and you don't, you still can't work because you're taking care of your significant other. So it's a really tough thing to be behind the eight ball. But if you're behind the eight ball, you could still catch up. Here's what I want to talk to people about. I have clients that run the gamut. I have as you'd expect as a financial advisor, I have a host of clients who have been able to retire early. It's not everyone retires early, but some of them retire in their 50s, some in their low 60s, mid 60s, and many of them have more than enough to retire comfortably. And they often live a very pricey lifestyle. They don't go to the park to play pickleball with their friends. They go to a very high-end club to play pickleball. So if you amortize it, it costs them like $1,000 every time they step on a pickleball court. But you have to figure out what you can spend. And not everybody wants to do that. I have clients who've retired with a really large net worth who have no interest in belonging to a club. It's not everybody's thing. You have to decide what's good for you. Now you have to decide also that not every single thing you do is going to be an expensive splurge. Hopefully you will find time to do things that don't cost money, because if you only do things that cost a lot of money, you will go through a lot of money very quickly. And if you are not prepared for that financially, then you will go broke before you die, which is the ultimate nightmare for most people. So this is what I mean in terms of you have to decide what your lifestyle is going to be. You also have to decide the years that you're going to splurge. I'm a big budgeter. I like to budget. But to me, a budget isn't just, I'm only going to spend this on food. I'm only going to spend this on entertainment. I'm only going to spend this on travel. I factor in a couple of splurges a year, because if you don't get those in, you're going to wind up going off your financial diet, similar to a food diet. If you don't factor in your dessert, your alcoholic beverage of choice, these other things into your meal plans, and you're just eating broccoli and steamed chicken, you're probably not going to last on that diet for a very long time. So you have to incorporate your indulgences. And this is what I want to talk to people about. If clients retiring with 3 million, 5 million, 8 million, some with only 500,000, some with a lot more than 30 million. And we have to decide in terms of expectations. I call this the soft touch of what I do, what their lifestyle could look like. It's a number of levers. You want to spend more on housing? Do you want to spend more on travel? Do you want to spend more on something else? And then we have to take a look at the first 5 years of your retirement will be your healthiest. The next 5 years will be less healthy. And then the 5 years after that, there's a really good chance you won't be wanting to travel as much. You won't be able to, even if the desire is there. And things start to change a little bit. Your energy levels could change. So is there a health plan? I don't mean do you have health insurance like that, a health plan like that. I mean, do you have a health plan in terms of diet, exercise, nutrition, things that are important to do for people who are of geriatric age. These are the things that we go into when we talk to people about retirement, because it's not just about the dollars and cents. It's about the peace of mind that you can do things to help your dollars and cents. All right. So having said that, let's talk about the markets real quick. The market feels a little wobbly here. And I'm doing this for a long time, so it's not just a feeling. I'm looking at some of the major stocks. I'm looking at Nvidia, which went up another 6% today. And it, to me, for now, a lot of stocks, they're looking like a blow-off top. It's not that they're going up. It's the speed at which they go up. Stock that goes up 100% is great. If it does it in 2 or 3 years, it's great. If it does it in a year or less, wow, that's pretty fast. So to me, what gets me a little antsy is when the stock market overall has a quick run up. Now, stats would say that we had May 23rd was the 100th trading day of the year. And when the market's up, as measured by the S&P 500, which you cannot invest directly into an index, but you could invest into a security that tracks or mimics an index, the index is up for the rest of the year, something like 70% of the time. But most years, the stock market is up. And even the years that the stock market goes down, we do recover. It's just that maybe the market recovers, maybe a broad index investment recovers. Individual stocks, though, don't always recover. And this is, to me, the real tough thing about being an individual stock investor. They're great on the way up. We could think a company can do no wrong. But ultimately, stocks peter out. Their markets become saturated. The markets become mature. And the companies have to rely on finding a new growth phase that was even bigger than the one that got them to where they are now. That's a really tough thing to do. This is not a call on price direction on any particular stock. But what I am saying to you is, what do we do about this? You could rebalance. You could take a little profit off the table. You could take that money and invest it into something else that's more stable or something you don't have. But there are a lot of ways to get your portfolio in alignment with your risk tolerance. And a lot of you, especially my clients, are walking around with pretty big fat portfolios right now. Probably a lot of you have more money in the market than you ever thought you would. And what I'm doing with those clients is I'm scaling a little back. Maybe I'm buying some treasuries, maybe just some cash. But there is a conversation that happens with clients that asks, do you have any cash needs coming up in the next year or 2 or 3? And sometimes people tell you, let's say a year ago, they didn't have any cash needs that they could think of, and now they do. Maybe an adult age child needs some help. Maybe they decided to pay for college for a grandchild. Maybe they decided to buy a boat or move to a bigger house. Or maybe they decided now is the time to redo the house, redo the kitchen. All of these things require cash. And while the market's up and the getting's good, I want to make sure that they have taken steps to protect themselves, take that cash out now. It's not that the market can't go higher. It's just that the market could go lower, which means you have to sell more shares to raise the same amount of cash, which really could put you in a bind of having to really, it makes things cost even more when you're relying on your investments to pay for things. I hope that makes sense. So that's one reason why things are looking a little toppy, a little correction-like. The news came out, American Airlines cuts its outlook, but other companies are saying things are going pretty well. So the point for me is, I do think the market will be higher. But higher could mean 5 years, 10 years, 20 years out. I can't tell you if the market's going to be higher 6 months or 12 months out from here. I wish I could. I can give you all the statistics and probabilities that 80% of the time the market based on this should be up here, and 90% of the time here, and 50% of the time on that. But there's always a high percentage that things don't work. And things often don't work at the most inconvenient. And things don't work at the most inconvenient time in your life. I call it the Murphy's Law of the stock market. The stock market has a tendency to go down right when you need to take your money out of the market. So we avoid that. We take measures like holding on to cash in advance of a cash need. So if we correct or we don't, there's going to be so much talk about it and so much effort given to it, the topic, and we have an election coming up as well. And everyone's going to be in the game of calling the stock market, what it's going to do over the near term. And we don't really know what it's going to do over the near term. It pays for me to always say, I think it'll be higher, because more often than not, it is higher. But it's not that. My time horizon is a long time in the distance. If your time horizon is shorter to needing your cash from your investments because you're retired, there could be a problem. If your time horizon is longer, a down market is your friend, right? You want the market to go down because you get to buy more shares out of you're buying with the same amount of money. So when the market does go back up, you make out even better, right? That's how the math works. So that's something I want to talk about. Then there's this other thing I want to just show you real quick. Let me show you my screen. That's not what I want to do. Here we go. Okay. So you see this, the Dow down 216, NASDAQ, new record over 1,700 for the first time. Thank NVIDIA for that. Another huge update on NVIDIA. S&P 500, just about record territory, over 5,300. Gold up 27. Oil had a nice up day. 10-year yield is up. Interest rates are moving up. And we were starting to think that interest rates could be cut this year, right? We were, right? And then there was going to be a May cut, maybe a September cut. According to the CME Fed Watch tool, we probably won't see a cut in September. We might get one rate cut this year, if at all. So it makes you wonder, rates stay higher for longer, even though unemployment is still low. Once that starts to turn, will the Fed be able to cut rates fast enough to reverse it? Because these are long cycles, and once they start, it takes a long time to break them. Fine-tuning with Fed interest rate policy is a very difficult thing to do. So we went from soft landing to hard landing to soft landing to no landing, and now we could be accelerating, at least in terms of inflation. My coffee's over here. Iced coffee. So the bottom line is, my feeling is, if you haven't rebalanced, if you haven't reassessed your risk tolerance, you should do so. And you should do so, I think, the sooner the better. All right? And what else are we talking about today? Oh, yeah. Let's take a look at MicroStrategy. This is a stock that's been a huge winner in the stock market. If you look at it the last 5 years, all right, that's not what I wanted to do, but if you look at it the last 5 years, it was all the way down here, about 100, just when the pandemic was getting started, and now it's 1,600. That's a pretty darn gigantic move. What gives? Well, the CEO decided to put all the company's money that had in the treasury department, in its own coffers, in its bank account, and put it all into Bitcoin. So the company's built up on the rising price of Bitcoin. Now, it was a winning strategy. It was one hell of a gutsy gamble. Stock is up huge. But is that what you want from your companies? Maybe you'd think, if I want Bitcoin, I'll go buy Bitcoin. I don't want to buy a stock and then see the company put all of its money into Bitcoin to make money that way. I want to buy a stock for a business. That's my thing. I might be a little bit more traditional, a little bit more old-fashioned, a little bit more conservative. But my thing is, I'm not buying a stock so that the treasurer or the CFO of the company could put all the money into something else as a gamble to get the stock to go higher. But the latest one is a company called Semler Scientific. And Semler is not putting money into Bitcoin. It was just released that they already bought a lot of Bitcoin, and the stock was up 25% today. That strikes me as a little odd. I'm not knocking these two particular stocks, but I am saying that for most of us, we buy a stock for the underlying company. And as the underlying company's business develops, we could be rewarded with a rising stock price. Capital, right? Capitalism. But if they're doing it because they're investing in some other thing, in this case, Bitcoin, then what am I really buying? I could just buy Bitcoin or a Bitcoin ETF. So that just strikes me as a little weird. And I just want you to be weary of it. If you're okay with it, that's a personal decision because this is personal finance, not Mitch's finance. And lastly, healthcare. I was talking with Bobby today, and healthcare really took it on the chin today from CVS, ResMed, Gilead, Merck down over $3. It's good. It's a lot for Merck. Pfizer, Glaxo, Abbott, Amgen, Bristol Myers just goes down. Like Bristol Myers and Pfizer are just awful. But at Novo Nordisk, they have the first company in the GLP arena with Wegovy. That's barely off its all-time high, but still, it was a pretty tough day for the healthcare stocks. So we'll keep an eye out for those. What sectors did do well? I'll tell you what sectors did do well. That's not it. Hold on. Sector ETFs. Boom. Okay. So what did well today? Energy was the standout winner. You saw before we went over oil was up to over $2 a barrel. Technology did well. Why? Because NVIDIA was up so much, lifted other boats. Communications, which is mostly Meta and Netflix. And then down the line, XLU, utilities, which have been on a tear lately. Interest rates are higher, so that hurts utilities a little bit. Discretion and consumer staples, financials, and industrials were all down. Stocks were mostly down today with a few notable exceptions. So that's the story for the day. I thank you for joining me. We'll keep an eye out. It's a short week. It's Tuesday already, so we have another weekend coming up. I hope you all had a lovely 3-day weekend, and I'm sure you all remembered what Memorial Day is really all about. All right. Have a great day, and thanks so much for watching.